Okay, all right. We've got, Anand Shah now joining us. He's head of PMS and AIF investments at ICICI Prudential. He's a market master of the day. Anand, good to have you with us here. Thanks very much for your time. The cement deal, which is breaking, another one under Adani's belt, Ambuja acquiring Orient Cements. What do you make of it? I mean, you're going to comment on this transaction or the space? You're welcome to. Go on.
Hi, very good morning, and thanks for having me here. So what's happening in the market in general, and more particularly, instead of creating a lot of capacities, the equity market valuations are so high and equity is so cheap, we are seeing a heightened M&A activity, no doubt about it. This sector has been consolidating for almost decades, if not years, and for a couple of decades where the large players are becoming larger. So I think to that extent, today where we stand on cement sector, the profitability is fairly low. Demand has been sluggish for last couple of quarters. So all those apart, what is keeping the market excited about this sector remains the M&A activities.
Anand, hi, morning. So earnings have started trickling in, and that's the new debate on the street, right? Whether it's going to be worse than the subdued expectations or not. And very mixed early trends coming in. What's your thought? I mean, are we going to see big downgrades post this season? What are you working with?
Indeed, the results indeed are weak, barring banks, which have been, again, there it's a mixed bag, and some of the banks have been able to surprise positively, but barring banks, I think most of the cases we are seeing challenges as far as earnings is concerned. So if you look at market and step back, I think last 4 years have been earnings-led market movement. More so recently, I think our belief is the markets is actually moving ahead of earnings, and there can be some disappointment. So where we stand today, I think some correction in the equity markets will make it a lot more safer, given that our outlook on earnings, especially for this quarter, next quarter, remains subdued. We'll need to see as we move forward what sort of steps government takes to stimulate the economy, or what are the benefits, because what we are seeing is US, Europe, China, all three large blocks of economies are also stimulating. They are cutting interest rates at the same time. So we'll have to be mindful of what's happening in the global recovery, especially China, and at the same time, what we do further to boost consumption, particularly, which has been very, very weak for a while now in this country. So that's the challenge today as we speak, that earnings are soft and might be softer, and the market's been at the all-time high.
All right. I mean, a lot riding on this festive season, right? Because H1 has been soft, H2 and this festive season, a lot riding in that sense. Just a few other stocks, Anand, I want to highlight before I come to you for more questions. City Union Bank, Surabhi, I don't know if you highlighted 9%. It's a big mover on big volumes. If we can have these stocks up. Actually, it's the second largest volume traded name across on the NSE. If you can have those stock up, please. Yeah, so 165 on City Union Bank. Look at that. Orient, by the way, has completely fizzled out. It's the biggest volume mover, but it started 4-5% higher. It's up about 1.25%. But volumes, but price has come off. CG Power should be highlighted 5% now on CG Power, 815. It sold off 6% yesterday. Ola Electric is up about 2%, so 83, 84 rupees. There is Shree Cements, which is up 2%. So, I mean, actually, we should keep an eye out on some of the other cement names as well. So that is up 2% right now. Shree, that is. Adani Green is up 1%. Deepak Fertilizer is up 2%. Newland Laboratories is up 2.5%. Just Dial is up about 1.5%. Jyoti Laboratories, but I mean, volumes are tracking lower. Market breadth is sort of firmly down, 2:1 in favor of declines right now in terms of advances declines. And to look at what is down, Mazgaon Dock, which went up yesterday sharply, is down 4%, is the biggest volume-led loser. Amber, which was, I think, 20% higher, limit up. It's the second biggest volume-led loser. It's down 4% though, but big volumes. PNC Infra. PNC Infra was limit down yesterday. It is down another 11% this morning. PNC Infra is up on it. Look at the volumes, 4 million shares on PNC Infra. And I was talking about Tata Chemicals in the morning. Tata Chemicals is down 3%. I mean, it went up sharply yesterday, but it was in the F&O ban. It's out of the ban. And as a result, it's, you're able to sort of take a trade one way or the other. It's down 3.5. 361, poor numbers. Vamakshi had highlighted 4% cut there. BEML is down 4%. Garden Reach went up sharply. That's down about 3% or so. And there is Gravita India, a company you will hear from in the next 20 minutes. That stock is down about 5% or so. Viatech Vabag is another one. It went down 6%. It's down another 3% this morning. Sterling Wilson Solar is down to 600 rupees. Had a sharp move. Sold off yesterday a little bit, 2.5%. But that is down this morning as well. Anand, I mean, it's losing money is one thing, but seeing some of your gains erode is also painful. Potential sort of paper gains, which you kind of sit on, but that's part of the game, Anand. But have you taken money off the table anywhere where gains have been outsized and you really thought that maybe it was a bit too much?
Indeed, that's all in the active funds management. We keep on doing that. But just to touch upon what you've been talking about, I think it's not new. While the Nifty touched all-time high sometime in third week of September, even at that point of time, we had 255 stocks out of Nifty 500, which are down 10%. If I'm not wrong, more than 90 stocks were actually down more than 30% from their all-time high. So notwithstanding the way Nifty was, I think internally the market was fairly correcting since the election result. So clearly, it's not surprising to us that the broader market is sort of soft or maybe declining, while Nifty is holding on basis few sectors or couple of companies which are heavyweights in the index. So coming back, that's what I was sort of talking about, that the earnings is, I think, what will be looked out for. This quarter might be weak, but we will have global headwinds turning into global tailwinds. We will have recovery from festive and otherwise, post-Rabi crop. And the second half is always a busy season. So we can have some bit of pickup in the capex cycle also. So all in all, I think all focus on fundamentals, focus on economy, which should augur well
Got it. By the way, let's just go back to City Union Bank for a bit. This 10% surge on the stock, and I just want to put the numbers out there once again. In a season where asset quality stress is the big worry point and watch point for most lenders, City Union Bank has actually done really well. If you look at the percentage, gross NPS as a percentage, that number has actually come down from 3.88%, so almost 3.9% has come down to about 3.5%. And unlike a lot of others where slippages are just shooting through the roof, going up by 100, 120%, that's not the case with City Union Bank. The slippage ratios again come down to 1.47% from 1.53%. And all this coupled with an expansion in margins. Remember, we went in the quarter, again, with the worry about how much margin compression will banks start seeing. Well, no such issues for City Union because they've actually managed to expand the NIM just that little bit. And that explains the surge on the stock today. Anand, on the lenders, so like I've been highlighting, it's very, very mixed trends, right? Kotak had its own issues, and then there's HDFC Bank, which obviously is standing tall this quarter. What are you working with? Would you buy anything afresh? Would you stay away? What's the advice? Because it's no longer a homogeneous universe.
Indeed, I think stock picking will be the key across sectors and notwithstanding even in banking. And look, the banking sector actually has come a long way from where it was in terms of asset quality. Obviously, the growth has been subdued on the back of slow growth in the deposit market. But in terms of asset quality, I think the Indian banking industry today stands fairly comfortable across banks, be it state-owned banks or be it in private banks. The gross NPA and the net NPA numbers have come off significantly over the last 4 years, and that augurs very well. The capital adequacy is strong. Margins got elevated and now they've sort of stabilized. So I think banking as a sector to us looks like one of those quality businesses, franchise businesses, again bottom up, depending on which bank we are talking about, where the valuations are still reasonable. Any comparable sector with such ROE and such growth today is trading at a much higher multiples, be it price to earning or price to book. So I think we remain overweight as we speak today on banking sector in general and select banks in particular, which we do a lot of bottom up research.
Yeah, but this is a season of sharp reactions. RBL down 17 yesterday, City Union up 10% today, Kotak down 5%. So it's really all over the place. Let's quickly actually bring in our colleague Abhishek to detail out why City Union Bank has really hit the bullseye in the second quarter. Abhishek.
Well, it's against the trend in the industry with respect to, slippages and asset quality deteriorating for many players. City Union Bank, on the other hand, has actually improved its asset quality, lowered the slippages and improved its net interest margin as well, which is heartening to see. So if you take a look, the business momentum has been pretty healthy for them. 4.5% growth with respect to quarter-on-quarter deposit momentum and about 2.5% loan growth that they have had. And this has augured well for them. Net interest margin has improved to 3.67% versus 3.54% in the previous quarter. And I think amongst all the lenders, this is the highest net interest margin improvement in a lender that you are seeing in Q2 FY25 on a sequential basis. NII is up 6.8% quarter-on-quarter. PAT is up 7.8% quarter-on-quarter. The annualized slippage ratio has declined on a sequential basis to 1.47% versus 1.53% in the previous quarter. Even their asset quality has improved massively to 3.54% gross NPA ratio in Q2 FY25 when compared to 3.88% in the previous quarter. Macquarie has written on City Union Bank they have an outperformance rating and a target price of 185 per share. They say that growth engine has turned on. They expect ROA to remain at about 1.5 to 1.8% despite higher credit costs that they foresee going ahead. Risk reward looks favorable given the fact that there is potential growth right now and ROA trajectory is good right now. Back to you.
Okay, all right. Got it. Abhishek, thank you very much for that. And Anand, we'll thank you as well for joining us this morning and giving us some thoughts on the market setup right now.